Welcome back to the John Trading channel. I want to begin today's video by starting on the Ethereum weekly time frame. So we can see in this current area that we have been trending along the 20 exponential moving average, always looking like at this current point, since we have this positive slope, we are trending positively to the upside. And you can see that the area that we are currently in, it is the value zone that we're in right now. So you can see we are slightly below this actual value zone. We have punched a little bit below the 20 exponential moving average. But if you look to the left here in this area, can you not see that that's sort of what we did on this bar? And that's potentially what I could be expecting in the future. Right now, we did have a little bit of a bearish bar in this momentum. We're actually poked down and we're nearly closing back inside. So if we do and we're able to close back inside of this area, I totally would not be looking for a complete bearish move, because you can see we had a strong push to the downside. If we actually measure this percentage that we broke below this 20 exponential moving average, which is the orange line, we can bring this down. You can see it broke it by 10%, and then we continued up. We never closed in that area, which is potentially what I'm looking at for Ethereum on this current week. So we currently have 15 hours until the end of the week. So what I truly would be looking for is a line that actually closes above this 20 exponential moving average. And we're so close. We're probably 0.025, we're 0.4% away from actually closing inside the 20 EMA, which is definitely something that I'm looking for. Reason being is we still do have this positive trending exponential moving average. In this area, it was a lot of resistance in this area. I can see multiple times we resisted in this area. Now, what's actually happening, we've come into this area and we're now testing it as a support level. So that's why I'm not overly bearish just yet, but even if we were to get a close on this low, near the low of the 20 exponential moving average, I would be a lot more bearish, but it doesn't look like it's going to currently happen. We have 15 hours, so we just need to watch that. So rather actually zoom out on my trades and look at what's the weekly doing, because then that's also going to help me on the 5-minute chart when I'm trading these 5-minute charts, because I know that, let's say that the weekly has higher probabilities of long positions working out than short positions. Why do I say that? Because we do have this positive EMA. We are in this value zone. There definitely will be buyers in this area looking for upside. So right now, being in this upward momentum market, rather on the 5-minute chart, I'll take all of the long trades that I see, but I won't take many. I will take maybe just a couple, but I won't take as many on the 5-minute chart using the short-term strategy, shorting in the market. Reason being is we still have this long-term trend. If we zoom out in this area, all through this area, completely through here, you would be looking to actually short in the market. So you would then look that you would be taking every short position you're getting in the market, but you wouldn't be taking as many long positions. Although we are still having a bit of a push up, we still do have a bit of a push up. We still do have a bit of a push up. When we're talking about high probability, you have high probabilities of these long bearish trend bars continuing in the market, and that's just what we want to trade with. So that's why I even like beginning with the weekly time frame, even every single day, right before I'm going in to trade the market on a shorter time frame. If I know that the weekly time frame has more bullish momentum than bearish momentum, then I know going into my 30-minute time frame, where I like to day trade a little bit closer to the market, then I know that I will be looking to take more long positions than short positions. So it's already increasing my personal probability in the market. The next thing that I like to do is then move on to the daily time frame, because you're able to see multiple, obviously, weekly bars within that time frame. In a lot of this area, we were bouncing between this price. We did have a bit of a break above this price. We did then come back and support. We failed the break up. We then came back down, retested the bottom of this range, came back up, retested the top of this range, came back down, testing the bottom end of this range. The reason I'm not completely bearish is we did go right below this bar again, which a lot of stops would be in. If a lot of people were actually longing in the market, just like myself, stops were in this area right through here. And you can see that a lot of people potentially are stop hunted on this particular trade. And sort of you can actually basically pull down the trading range just a little bit lower and connect these highs, and you can see we're just outside that trading range level, just like we were in here. Slightly up, slightly down, and you can even see in this area we're having that slightly up and slightly down exponential moving average, where we're just moving sideways. It's actually showing us that we're in that trading range price action. When we're in a trading range price action, the goal is always to be buying low and then to be selling high in these areas. And you can see that's at least what a lot of people have been doing since the 12th of May. So basically in a whole month, you can see that we're 30 bars today from this trading range price action. We've just been bouncing between this price. We haven't seen much up. We truly haven't seen much down in Bitcoin, Ethereum, and all these other cryptocurrencies. We are having a bit of a 5% down. If we look at this entire high to low, that's close to 10%. So we are having some decently enough swings that you can get in and out of the market. But again, we're not having those multiple 5% days to the upside continuously back on back on back. But you can see here, since we are still bouncing, we did break a little bit below. One thing that I would be scared of is coming back, retesting this area and then pushing more to the downside. So we just need to be careful. But again, this does look slightly starting to put a little bit bullish. So in this area could be just a stop hunt, looking to also buy in the bottom end of the trading range, looking to then retest the top end of that trading range. This would get a lot of buyers out, since a lot of people in this market who were long would have been stopped out in this area, so it's potentially wiped out, or a lot of the longs that were in the market now looking to push to the upside, because we are on that right hand translated end of the cycle. So I am expecting at least the next cycle to continue to the upside. So we're not sure if this next 4-year cycle is going to be left or right-hand translated. Right-hand translated would give it more time in the bull market, which would mean higher gains. And if we were left translated, it would mean less time in the bull market. So we do need to watch out and see how it's actually progressing, especially using this 30 and 60-day cycle for Bitcoin. We're currently 30 days through the next 60-day cycle, and it's looking like we're topping in the left-hand side of the translation of the cycle, because if we do a 60-day and bring it across, you can see that the midpoint is right here on the 60-day cycle. And potentially, if what's happened is this is the top and then we continue down for this entire 60-day cycle, then this would mean it's left-hand translated. Reason being, it's on the left-hand side of the midpoint. We would prefer to have a right-hand translated market, because what that would mean is through all this 60-day cycle down here, what it would actually mean is we're traveling up, we're traveling up, we're traveling up. This was the top in this area, and then we traveled down. And you can see if that's where the 60-day cycle starts and begins, then we were traveling to the upside for a larger portion than we were traveling to the downside. Whereas if we have this top on the left-hand side and then we just continue across in between these 2 points, you can see that we're left-hand translated, because we grew for a short amount of time and we fell for a much more prolonged amount of time. Quickly coming over to look at Binance Coin, it's been absolutely destroyed this week, down over 22.5%. So absolutely massive week to the downside for Binance Coin. But again, when you scroll out, especially on the weekly time frame, you can see a lot of support in this area, support in this area, support in this area. So when we come into this area like we're seeing right now, if you think about it, we were topping in this area, topping. So this actually makes me look like we're in the top side of a trading range. This is the bottom side, and really the goal is always to be buying low and selling high. So you always want to structure the right strategy when you're looking at the market. The goal is to be buying low. You don't want to be buying up at these prices, because that's probably close to already double. You're already up 60% from that price. You've already missed a good percentage of the trade. Just bouncing between these tops and bottoms, you can see continuous upside movement, up over 50% from this top to the bottom, down over 35%. So that's what I like to do, especially scroll out to the weekly and actually figure out which trading direction this is in. And since we're slightly down, slightly up, now turning slightly down again in the exponential moving average, it's not signaling that we're overly bullish or overly bearish, which also shows that buying in the bottom end and selling in the top end is never the worst strategy. Obviously not financial advice. Dogecoin is currently seeing something similar. Obviously in this area, there is a bit of support. And when we came down into this area, we have had a bit of a springboard to the upside. So we're down 14%, but it probably was down close to double that, close to 30%. But we tried to come down in this area, and we're obviously having a lot of upside momentum, even showing that there is a bit of a wedge to the downside, which every time we get the bottom end of the wedge, you want to be buying and buying. So obviously strong pushes across on that. Again, not financial advice, just something that I'm personally doing in the market. Even when we come across and look at XRP right now, we are looking at to being in the top side of this trading range. That's obviously why there was a bit of selling pressure coming down. But you can see that we do have this positive current exponential moving average. The only thing I'm scared of is we're slightly up, slightly down, now slightly up again. Hopefully we don't tick to the downside, and especially because we are in this resistance level. What I would like to see is a springboard up into this area, then come back, retest it as the exponential moving average continues higher, and then see another springboard again to the upside. That would sort of be the preferred play by right here. But you can see we came into that value zone. There's a lot of buyers. We do have this positive trending exponential moving average. There were buyers even in this area. We did slightly close below. Next bar was positive. That's sort of what you want to see if you ever do see these closing bars. Like I was talking before, we're really close to closing the weekly on Ethereum, but the goal is really, if we do get a close, you need the next bar to actually go above. And if you ever get one that goes below this low, it's usually probably better off to even get out of the trade. But It's all dependent on the particular circumstance of the trade. So right now, hoping we're not in this trading range price action. Now let's look at some crypto news. Get out of crypto platforms now. I can't say it any plainer. We now know for certain that crypto trading platforms are under US regulatory law enforcement siege, and it's true. A lot of companies right now, SEC is coming after Binance, they're coming after Coinbase, they're potentially coming after Crypto.com and a couple of other companies. So it's definitely scary at the moment, especially for people who are in the US, even people that are potentially in Australia like myself, because the government is closing down our access to crypto exchanges. And you can see probably getting out of crypto exchanges isn't the worst idea. Even for myself, they've banned a lot of ways that I can deposit on Binance, and I do have some funds on Binance. So especially with all the stuff that's going on right now, might be the best time to get out of Binance and hold on a cold storage wallet. Let's now look at Bitcoin on the weekly chart. Easy paths do not reward those that follow them. Hard paths, however, reward those that endured the most. If we look back into this 2020 area when we had a really strong push to the upside and see how we're traveling in between this up and ascending channel, in this area, it looks like we're in this very similar point. We're basically coming to the bottom end of this channel, looking for a then continued push to the upside, especially in this channel. So potentially what happened here right before we had this massive bull run, potentially is what happened here right before we have this parabolic push to the upsides, and even talking about the different waves. So we're having wave 1, wave 3, wave 5, talking about the Elliott wave principal strategy. Bitcoin is still the market leader with a market valuation of close to 500 billion, accounting for 47.5% of the crypto's economy, close to just over 1 trillion in the total market cap. Then if we remember back in 2021 when we had the massive bull run, Bitcoin itself had $1 trillion market cap. So we were basically double, or if not close to triple, the market cap that we were at now. So a lot of coins definitely have a lot of potential moving into this next bull run, potentially having 2 to 3x potentials, especially all the big ones. The small ones definitely will have a little bit more potential, but obviously the risk is higher. I've heard the left side move called a smooth Bitcoin parabola. I can promise you it did not feel like one when you were checking Twitter and charts every single day, and that's extremely true. We do have a lot of 30% pullbacks when we're having this next massive Bitcoin bull run. It allows a lot of opportunities for bulls to get trapped out of the market and then have to buy at a lot higher prices. And you can see what's actually happened here. Once we get this break above of the short-term moving average breaking above, and that's literally what we had. We've obviously just had the crossover in this area. Now we're looking at this 8 number, so you can see how we're talking about all the different downturns. And we're now coming to this 8, showing a very similar move, how we had this sort of up, down, slightly upsending trading range, right? We were talking about before, just an ascending trading range, still in a trading range because you're bouncing between prices rather than just moving to the upside. But this is really what's happening right before we hope for this next bull run. I really hope you've enjoyed this video. If you haven't already, leave a like on the video, make sure you're subscribed, and leave a comment if you're enjoying these daily crypto videos.